Hi guys, welcome back to my channel. Kelvin here. So with inflation going to the moon, supply shortages, interest rates going up, things have already been quite bad. But just when you thought things won't get any worse, Putin be like, but wait, there's more, and decides to invade Ukraine, making everything even worse than ever. Thank you, Putin. Now, it's already a known fact that the recession will be coming very soon, probably much sooner than your GST reaching 9%. There are of course many ways to hedge against the inflation and the portfolio from becoming red. But one of the most famous ways to hedge is by using gold. In fact, I keep seeing the rich dad poor dad guy telling me to buy gold, while gold is set to rally. 97% will lose everything after 2022. Gold is God's money. But it's not only him who thinks that gold is good. Ray Dalio, the hedge fund manager, also has 7.5% gold in his all-weather portfolio. So in this video, I want to find out whether gold is really a good investment or not. Is it really God's money? Or is that guy still talking nonsense as usual? But before I start, I would greatly appreciate it if you can help to tap the like button. In return, I will show you a lizard playing with a door stopper. Alright, let's start right now. Okay, a quick history of gold. Gold was actually already valuable since a long time ago, way before our ama was born. In fact, the history of gold began way before the ancient Egyptian era. You know, pyramids and mummies. But it was around 560 BC that gold started becoming a currency. That's because before that, people were trading physical goods called bartering. They'd be like, here's your 2 veggie, 1 meat with extra rice. In return, I want 1 mee siam, but don't want ham. As you might imagine, this is super troublesome because things may spoil easily or the other guy didn't have what I'm looking for. So people started looking for alternatives. They wanted something that is stable. You wouldn't want your money to disappear when you dip it into the water. At the same time, they want something that is rare enough to be valuable, like you can't just walk around and see it lying on the floor. Then they also want something that is easily malleable, meaning you can easily use it to create something else. Out of so many elements that settled on gold. Gold is easy to carry around. It won't suddenly melt and you lose 50% of it, like Alibaba. And also, you can easily melt gold to create stuff like gold coins, jewelry, and gold teeth. So for a while, gold has been used as the currency. But the turning point came in 1944, right after World War II, where 44 countries came together and created the Bretton Woods Agreement. This agreement says that from now on, USD will be pegged to gold, and all the other currencies will be pegged to USD. So all is good, right? Well, yes, but no, due to a variety of reasons, like US anyhow spending money for the war and printing money to pay for their debt. Nothing new there. There were more and more concerns that the US gold supply was no longer enough to cover the number of dollars in circulation. Then eventually in 1971, Richard Nixon decided to cancel the Bretton Woods Agreement so that they can print more money, and thus ending the gold standard. So right now, all of the money that we use are no longer backed by gold. Instead, they are backed by the faith in the government. Meaning, the only reason this smiling Yusof Ishak has value is just because the government says so lor. True story. However, as you might have guessed, the value of the dollar totally depends on the government. If your government go and anyhow print money, or your money becomes worthless. If your government anyhow go and attack another country, leading to everyone else sanctioning your country, or your money is worthless also. There's a study by Dollar Days that found that out of 775 fiat currencies, 20% failed due to hyperinflation, 21% were destroyed by war, 12% destroyed by independence, 24% were monetarily reformed, and the remaining 23% are approaching one of the other outcomes. And true enough, if you look at the value of US dollar, over the past 100 years, the dollar had already lost 95% of its purchasing power. Meanwhile, if you look at gold, after the USD stopped pegging to gold in 1971, gold has gone from $36 all the way up to $1,918, gaining a total of over 4,500%. Kind of reminds me of the time when Malaysia kicked out Singapore and the Singapore dollar went up by 300%. Anyway, that was a quick history of gold. But now, here's the real question. Is gold a good investment? So here are a few facts. First, gold is a good hedge against inflation. As I've shown earlier, while the dollar is losing value every day, the value of gold has actually been going up. It has been found that during scary events, gold prices tend to go up. For example, in 1980, there's the Iran Revolution, and then Russia go and attack Afghanistan. Gold went from $35 to $800. 2008 financial crisis, gold reached $800. 2016 Brexit, gold reached $1,300. 2020 pandemic, gold touched $2,000. And that includes right now, with all the recession fears, gold is going back to all-time highs. Besides that, it has also been found that in most recession periods, gold prices have actually gone up. Second, diversification. Since 2005, it has been found that the gold price has a correlation of only 0.14 with the S&P 500, meaning the gold price doesn't really follow the stock market. This means that if you know that the stock market is going to crash left and right, you can theoretically avoid the crash by paper handling, selling your stocks, and park your money in gold. If you check gold's performance during some of the biggest market crashes, while the S&P 500 gave a negative 30% average return, gold gave an average positive return. So, should you invest in gold then? Not really. Here's why. In the past, you can see that gold is really valuable because there's a real use for it, like currency. But right now, things have changed. Gold is no longer used as medium of exchange. Check this out. Almost 50% of gold is used to make jewelry. 30% is used for investment purposes. 15% are held by central banks and institutions. Only 7.5% are used to make technology components. But over the past few years, the demand for gold in technology has actually been going down. On top of that, scientists are also constantly searching for new materials to replace gold. Second reason why gold is a bad investment: low returns. While gold has gone up by over 4,500% over the past 50 years, which is a lot, but over the same 50-year period, the stock market with reinvested dividends gave a godlike 16,000% returns. And no matter which period you compare gold to, whether it's the 10-year, 30-year, 80-year, 100 years, the stock market has always given a better return because stonks. The reason is very simple. Gold is just gold. You can't use it to produce something else. Warren Buffett said it the best. If you own 1 ounce of gold for an eternity, you still own 1 ounce of gold at its end. On the other hand, if you own a company, it can sell products and generate revenue for you. It can make money for you while you sleep. The only thing that gives value to gold right now is just simple fear and greed. People see gold price go up, they be like, buy ah. People see gold price go down, they be like, sell ah. So simple. Okay, it's very clear that stocks will always outperform gold over the long term. But now, what about investing in gold only when times are bad, like the high inflation period that we have right now? So, as it turns out, gold has a very low correlation to inflation at only 0.16. Check this out. In 1973 to 1979, when the inflation rate averaged 8.8%, gold gave a 35% return. Then in 1980 to 1984, when the annual inflation rate was at 6.5%, gold actually lost 10% on average. Finally, from 1988 to 1991, when the inflation was at 4.6%, gold lost 7.6% return. So during high inflation period, sometimes you can earn a lot of money by investing in gold. Other times, you can lose money instead. Here's another chart by James Montier. He's comparing real gold returns against inflation. There's only that 2 times where inflation is high, gold gave positive returns. But in all the other periods, gold had no correlation with inflation. Also, earlier on, I showed you that gold generally gave positive returns during market crashes. That's only part of the story. To benefit from this, you will need to time the market perfectly, aka sell and move your money to gold right at the start of the crash, then quickly move back to stocks right at the end of the crash. And I know that no one can time it perfectly, unless you are hardcore. It was found that right after a big market crash, 6 of the 10 best days occurred within 2 weeks of the 10 worst days. If you try to time the market and just miss 10 best days out of a 20-year period, your returns will have easily dropped by half. Miss 20 best days, your returns will already be super duper bad. So, can you try to outperform the market by investing in gold during uncertainties? Can, no problem. But there's something called opportunity cost. While you can try to outperform the market crash by investing in gold, you are missing out on potential gains from the stock market if your prediction is wrong. So, in summary, gold is not a good investment, whether it's long-term or during market uncertainties. Instead, just buying good stocks, then dollar cost average over the long term is a much better strategy. And Warren Buffett thinks so too. Be greedy when others are fearful, And right now, when everyone is scared, it is the best time to buy stocks. Anyway, that's all for this video. But do let me know what you think. Are you actually investing in gold? If so, what are your plans? Like, share and subscribe as I'll be posting new videos every Monday, Wednesday and Friday.